Markets Now is brought to you by Durastack Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durastack technology features 3 powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.
Welcome to Markets Now. I'm Michelle Rook with Mark Knight with Farmers Keepers Financial, and we're here at Commodity Classic. It's a Friday, and we have grain trade higher with wheat kind of leading, while the livestock futures are mostly lower. Okay, Mark, thanks for joining me. Let's start off with wheat. We don't normally talk about wheat as the leader, but it is today. Is it putting in weather premium?
It absolutely is. I mean, that's the story. We've got some dryness, a lot of wind out there, and let's face it, we're at low prices historically. There's not a ton of wheat planted this year, so it's going to become more important for us to have some timely rains along the way.
Yesterday's drought monitor showed like 50% of the U.S. winter wheat belt is in a drought. So is that kind of what's taken hold here, you think? And a flip in the forecast?
For sure. That's totally the driver, all weather related at this point. We don't have great demand or anything else to talk about necessarily, so it's all about potential of this crop.
And there was some rain in the forecast early in the week, and I think they've taken that out right?
They absolutely have. So that's obviously, it's been dry, it's been windy, and you're taking out rain forecast. It's just an opportunity for the market to bounce, and that's exactly what it's doing.
My other question is, geopolitically, I mean, I know that Iran is not a wheat belt or anything like that, but it sounds like those talks breaking down a little, the tensions. Is there any geopolitical fear by these funds that are still short in this market?
You know, there could be that aspect, but you normally with wheat, you get a little seasonality towards the beginning of summer when we're going into harvest it, which is abnormal from corn and beans when we usually get the drop off. So I would think as a fund manager, and I've been on that side of it, that you're going to peel off some risk because the dryness, geopolitical events that are potentially there. The market got beat up for quite some time,
No doubt.
Last year or two essentially, and so it's probably just time to flush out some position changes and rally a little bit.
So new highs for the move in the wheat market, leading to new highs for the move in the corn market here today. Corn is just a follower or not?
At this point, I'm going to say yes. It's got everybody. It's awesome to be happening while we're here because everybody's excited. Oh, we're breaking out of this really tight 8-10 cent trading range. Beans rallied $1 something. Wheat's kind of rallied here a couple of different times, and corn has just been dead in the water. And so to get it above and back to the trading range pre-January 12th final numbers is very positive.
Okay, I want to reiterate that. So after the January WASDE report, we made a new trading range below that range we'd been in for a long time. So now we're back up to the levels we were before that bearish report.
Correct.
How important is that, and can we stay above there in those levels?
Great question. I personally believe we can, just because of the timing of the year. Ag Forum expected less, the talk is 5 million less acres. We've got such good, strong demand that we really need to have another good crop. There's not a area that we're struggling with on the demand side, but we have a huge crop to essentially chew through.
We're not trading South American weather yet, as far as we've been hearing. Brazil soybean harvest a little slow, Brazil safrinha corn planting may be a little slow. We're not trading that at all yet.
If as a fund manager, I would be looking at that and being nervous. Funds have still remained short this market. I think that's probably, you're starting to see them peel. I would expect today's report to show that they're peeling out of some of those shorts. And that's absolutely, look, the funds a lot of times are the ones that really can make these markets move a little bit, more so in beans than corn. But I think that's a point to.
And it's end of the month, isn't it?
Absolutely is. So pulling in some profits, even in the books up a little bit, that absolutely will factor into it.
So if we have higher weekly closes, maybe even higher monthly closes in both corn and wheat. Can they build on that?
I think they can, especially given where we've been. The last couple of years we put our highs in that January, February timeframe. We didn't do that. So this may be more set up for that seasonality, the normal seasonality of our crop, when the best times to sell are that April, May, June type of window in the planting season.
So usually the last several days we've been starting off talking about soybeans because that's where all the excitement has been, and that market right now is getting very close to the November highs. Will we be able to push through those? Are we waiting for more China confirmation, or what could get us through that area?
Yeah, great question. I've been super impressed with how soybeans have traded. We've rallied $1 something here in the last month. Really kind of started on the Trump tweet about China, and shockingly, the market, in the summer we had those types of tweets and the market would rebound back.
This is the 8 million metric ton additional old crop business.
Correct. And so it's
he tweets a lot,
I know. I know. But this last tweet, the farmers loved, obviously, and it's gotten this market has some legs, and I've been in this business a long time. The old school guys will tell you beans generally, if they're going to get through 11, they're going to push to 12, and so I would kind of expect that at this point.
Do we rally into the April summit in China between the two presidents and then do a buy the rumor, sell the fact?
That's a very strong possibility. That is absolutely a very strong possibility, because we're going to have actual planning intentions prior to that. If everything's a go and the meetings do happen, there was obviously some rumors that we kind of sold off yesterday. If that comes to fruition, I could see, look, if we're going to plant a lot more acres of beans this year, South America's got a lot of beans too, and so I would struggle to see that we're going to have a sustained rally in soybeans specifically without some fresh news.
But we're going to get a little help here with the higher RVO levels for biofuels too, and bean oil keeps kicking out new contract highs.
It does. Our crush capacity and bean oil's ripping, and we've had some decent exports in meal as well. That's the thing about the whole crush capacity that we are now. I mean, that's our driver, and it makes our exports a little bit less important than they used to be. Obviously, we need to stay not pile up with bean oil and meal though. So. But
having both certainly helps.
Oh, yeah. Absolutely.
Yeah, for sure.
Absolutely.
Okay, so cattle market crashed yesterday, and we're seeing follow-through selling today. First off, is this end of the month profit taking?
That is very possible. It's a great question. We've dipped down to a very supportive level, so I believe today's close will be pretty important. Look, this cattle market's going to be well supported because the herd is not there. We're dealing still with screwworm issues in Mexico, and so I am not bearish. I mean, it's a dangerous market to be in because there's so much volatility, but I am no means going to be bearish cattle for any time soon.
Secretary Rollins said yesterday they have no plans to reopen the border to Mexican cattle until they can push the screwworm back.
Yeah.
And we're still lower today.
For sure.
So
it is kind of baffling
a
little bit. And like you said, it may just really be the funds kind of just taking a little risk off.
Other possibilities. We had lower cash trade yesterday. There's still concerns about this JBS plant strike. Are we trading that?
That's the only excuse that I can kind of come up with what's going on. It absolutely affected the market.
Sometimes healthy corrections are healthy, though, right?
Absolutely. You're going to weed out the weak longs, weed out the weak shorts, and generally markets just don't go straight one direction unless there's a really big fundamental reason for that to happen.
And we've had a lot of them in cattle, haven't we?
We have. We've been dealing with that for the last year. So, we've seen obviously a crazy wild run in cattle market, and I would expect it to continue for probably another year.
Okay.
Anyways.
All right. Well, good to see you here at Commodity Classic. Mark Knight with Farmers Keeper Financial, and that is Markets Now.
With corn rootworm costing farmers up to $1 billion a year, you need the right strategy. Introducing Durastack Trait Technology, featuring 3 powerful modes of action to strike corn rootworm at full force, outsmart, outmaneuver, and outmatch their every move with the industry's first triple BT protein stack built for corn rootworm control. Take back your yield potential. Make your move at Durastack.com. Available for the 2027 season.